Okay, hello everyone. In this video, we are going to study about what is a contingent liability. Okay, a contingent liability are those liability which depends on the depends upon the happening or non-happening of future uncertain events. Okay, a contingent liability is a liability which depends upon the happening or non-happening of a future uncertain events. Let me explain this to you with an example. Suppose a company has been filed a case a company has been filed a case whereby a company was selling a juice, and by drinking a juice a person became ill and his one hand and one leg become paralyzed. So the company has filed a case upon the so the person has filed a case against the company. Okay, the person has filed case against the company. Now in such a situation, if a person wins, he will win 1 crore. He suppose he has asked an compensation of 1 crore. And if a person loses, okay, then the company won't have to pay anything. So therefore, if a person wins, that means that there will arise a liability that the company has to pay in future. Keeping this example as a base, okay, let me explain to you the meaning of contingent liability. Contingent liability depends upon the happening or non-happening, the case. They may win or they may not win. Okay, of a future uncertain event. So the case is happening or non-happening event, and winning and losing becomes uncertain. So therefore, if he wins, the company has to pay. If he loses, the company would don't have to pay anything. So this is not a liability that needs to be recorded. Rather, it is a contingent, because if it is not occurred, or it might not occur as well. So therefore, it is not recorded in the balance sheet. Rather, it is shown separately. Okay, separately under the notes contingent liability. Okay, now let us read the notes. A contingent liability are liability which have not arisen, okay, which has not arisen in this case, okay, or but may arise, but it can be on the happening of certain event. Okay, in other words, liability is uncertain. Okay, it may involve payment of money. It may and may not involve the payment of money. Okay, the contingent liability is never shown in the liabilities. Okay, rather they are always stated in the notes to accounts below the balance sheet. So it is not recorded in the balance sheet format, but it is shown separately in the notes to accounts at the below of the balance sheet. Now, what are the items that might be included in contingent liabilities? The items might be classified as claim against the company, not acknowledged debt. Okay, somebody might claim against, like this one is the perfect example of this claim. Okay, bill receivable discounted from the bank but not yet due for payment. Okay, proposed dividend for current year. I have proposed a dividend but not yet paid. Okay, guarantees be given by the company, one company giving guarantee to another company. So if that company fails to pay the amount of loan, then my company will have to pay. So that again is a contingent liability and need to be shown. You know why? Because if it is not shown, then a greater material information was being hidden by the company towards the stakeholder. Therefore, it is shown separately. It is not included in balance sheet, but it is shown separately. The last one is other money for which company is contingently liable. Okay. After this, the next topic is commitments. Okay. Let us see what is commitments. So a commitment is defined as an agreement to perform a particular activity at a certain date in future under certain circumstances. Okay, that means you have committed someone to perform a certain kind of duties, a certain kind of service, to provide service in future date. That is known as a commitment. However, commitment can be classified as estimated amount of contracts remaining to be executed on the capital account and not provided for. Uncalled liability on shares or other investment partly paid. Okay, and other commitments like arrear of dividends on cumulative preferences. So if you have issued a cumulative preferences in which the share of dividends not paid this year, the next year it gets accumulated. Okay, so such kind of dividends which keeps on getting accumulated will be categorized as commitments. Okay, if you still have any doubt, you can comment below.